Welcome to another great episode of How To with Ziad and Mia. Today we're doing our episode with our nice matching t-shirts. This was unplanned, but worked out perfectly. We look good. So today we're going to be talking about how to understand credit. And if you've been liking the content that we've been putting out, make sure that you're hitting like and subscribe on our YouTube channel and following us on our social media. We have Twitter, Instagram, Facebook, and LinkedIn. So go follow us there.
Yeah, thank you guys for subscribing. Yes, this was unplanned. We were both feeling a bit festive, I guess, but happy to dive into it. You know, one of the biggest things that people talk about and one of the biggest pieces of anyone's financial life tends to be having a credit card and understanding that whole realm of credit. And so we just wanted to dive in, talk through why it's important to have one, some important details to note with it, and what cards, you should be getting or how you should be structuring that portion of your financial life.
Yes, absolutely. And remember that all the information that we'll be saying in this episode is just general information. It should not be taken as advice. So please contact your financial advisor if you have questions about your specific situation. So credit cards are important not only because you can spend money that you may not have in cash on hand at the moment, but because you are building credit. And obviously a higher credit score, the better. And having a credit card really helps you to build this credit. And if you have good credit, then you're able to get lower interest rates. You're able to qualify for higher loans. And it can have many benefits in the financial world and in the non-financial world. So I'm going to be moving in the next week. If our credit scores were above a certain range, then we were able to get a lower security deposit. So having a higher credit score is definitely key.
Yeah, I mean, it's those little things that people don't even think about that credit score is so important for. I mean, with a lot of these major financial transactions, people tend to do a background check. They want to make sure that you're likely or going to be able to pay off what you're purchasing. And a credit score is one of the biggest metrics that anyone's going to look into. It's one of the first things people look at. And so it's so important that you're building up your score. So you're looking to start building your credit, you don't have a credit card already and you're looking to apply for one. Good news for you, there are beginner credit cards out there that are very easy to qualify for, don't require a high credit score already. They do tend to have lower credit limits, so you can't spend as much on it and not as many benefits, but that's not the point anyways. The reason for these cards is that you want to be building your score up to then have a better chance of applying for these better cards down the line. In terms of what kind of credit score that you want to be shooting for, 750 is a solid score. If you're getting to 800, you're in an amazing place, and that's basically the goal. And so make these smaller purchases on these cards and continue to pay off your balance every month and just keep building that up.
You also might think that you don't have a credit score when you do, because if you're an authorized user on your parents' card, so you've had a credit card that they've been paying for, but it has your name on it, then you actually do already have a credit score. This can be really great to jumpstart your credit score history because it'll show that you've had credit for a longer period of time. Of course, that's only going to apply if your parents have been consistent about paying it off, because if they're missing payments, this is also going to negatively impact your credit score.
Yeah, and this is something really nice to consider if you are a parent as well. If you want to set up your child to be in a better financial position, open up a card, be an authorized user with their name on the card as well, and allow them to come into the financial world in their adult lives with that higher credit score. For those kids who have had that opportunity, make sure to thank your parents. It's a great way to get a kickstart in your financial life.
Yes, and we're going to get into this a little bit later, but if they cancel their credit card and you are an authorized user on it, that can negatively impact your credit score as well.
Yeah. So with credit cards, it's really easy to apply for as many cards as you'd like. A lot of people tend to apply for and get as many credit cards as they can, thinking that this is a good thing for their credit score. It's more opportunities to build their credit, but that actually isn't the case. In terms of how many cards that you want to have, the fewer the better. If you have more than 2 to 3 credit cards active, then you might want to reevaluate your financial situation. A lot of institutions, when they see a lot of credit cards, they just see that as a more likely opportunity for you to fall into debt and not be able to make payments elsewhere.
Yeah, and another factor that goes into evaluating your credit score, it can be, what's the time between that you're opening these credit cards? Are you opening like 2 at the same time? Because that could bring down your credit score. It could show that you are looking to spend a large amount.
Yeah.
Credit card debt is one of the worst kinds of debt, so definitely do your best to try and pay it off as soon as possible if you do have credit card debt. And don't be spending more on that card unless you really have to. One of the major downfalls of having a credit card is just the ability or the want to keep spending because you're not paying it at the moment, but then you can really be penalized later on for having this low score. One of the easiest ways to limit your credit card spending is only using your credit card for necessary expenses. So only using them for your rent and utilities and gas, for example. And if you already have a low credit score, being consistent about paying it off and just working towards minimizing it is going to be the most important for boosting your credit score and trying to get it back up.
Yeah, I mean, one of the biggest pitfalls that comes with having a credit card is the fact that you can spend a lot more than you actually have. And it kind of goes in line with one of our episodes we talked about in terms of saving, is where you want to spend only what you can afford. Because not only is it bad on your credit score, but also credit cards tend to charge upwards of 20 to 25% interest on that outstanding credit card debt, which is an unbelievable amount. So you want to be making sure that balance is at zero at the end of every single month. A lot of people tend to think that in terms of boosting your credit score, all you have to do is be making monthly payments on time, but there's a lot more that goes into actually keeping that score high. And so one of the big things that you have to think about is also the length of your credit history. The longer history that you've had of spending and paying off credit, the better. And so what happens is we'll see a lot of people where they have that beginner card that doesn't have high credit limit, that doesn't have a lot of great benefits, and once they build up their score, they upgrade to a nicer card that's a little bit better. And in that situation, a lot of people tend to want to cancel that first card because they're not going to be spending on it anyways, but don't do that. Keep that credit card active because that allows you to keep that long history. If you cancel that card, all of a sudden you're losing out on that entire credit history, and that can reflect poorly on your score. Beyond that, there's a couple other things that apply to boosting your credit score. One of the big ones is having a variety or a mix of credit. Credit card debt is great to be able to pay that off consistently every month, but if you have an auto loan or a car loan or student loans or a mortgage and you're paying those off in time, that actually looks really good because you're not only able to pay off your credit card, but you're able to pay off these different kinds of debts as well. So that credit mix, don't think of all debts as being bad debts. As long as you can afford it, it does make sense and it's good. And then the last thing is also credit utilization. And so basically what that means is how much of your credit limit are you spending every month? And so the last thing you want to do is spend up to your credit limit every single month. You want to be making sure that you have a nice balance of, yes, you're spending on that credit, but you're not maxing it out, because then institutions can view that as dangerous, because you are basically maxing out the amount of debt that you can take on. And so keep that at a reasonable rate. Definitely important in keeping your score high.
So what percentage do you think you would recommend for people to spend of their limit?
Usually, 40% of your limit is like an ideal number. 50 to 60 is more of that max. You definitely don't want to be pushing past that. If you are, definitely check and make sure that you understand why you're going past that and try and make adjustments as needed.
So then we start to get into the question of what credit card is the best credit card for me. And that really depends on your lifestyle and what's important to you. It's going to be different for everybody. So some people prioritize travel and some people prioritize cash back. There's cards that'll definitely reward you for shopping at certain stores, eating out, or spending on gas, for example. With those retail credit cards, they're really enticing. Trust me, every single time I walk into TJ Maxx and I walk into Old Navy, I'm like, I have to get this credit card. And they can be good, but you don't really want to be using your retail credit card as your normal everyday credit card and be using it at other places like the grocery store. Really, those retail credit cards are made to be spent or made to be used at the store. That's where they're the best, and that's where you're going to get the benefits, because they don't really offer many other benefits besides the discounts at those stores.
Exactly. If you are in the situation where you do have a large outstanding credit card balance and are in that large debt position, have a plan in place to be paying that off. One of the big things that we recommend to our clients when they are in that situation is to go through and initiate what's called a balance transfer. So a balance transfer is just basically taking the credit card balance that you have and shifting it onto a different kind of credit card that offers a promotional rate. And so what happens is you tend to have 9 to 18 months, depending on the kind of card, where the interest on that card, instead of being that 20 to 25%, is at 0% instead. And so that is your opportunity. That is your window to be paying down this card as quickly as you can, as aggressively as you can. Because after that period, of 9 to 18 months, depending, then the interest rate shoots back up to 20 to 25% again. And so it's a great opportunity for you to make sure that you do get back to that position where you don't have debt. And if you're still struggling, at least you have this opportunity to pay down a good portion of the balance and avoid any interest.
So thank you for joining us for another episode of How To with Ziad and Mia. If you have any questions, as always, feel free to contact us. We're very reachable. You can DM us or you can comment even on our video and we'll respond to your question. You can call us at 310-441-9393 because we want to hear from you.
Yeah, and understand, as advisors, it's not just about investment management for us. It's about the entire financial picture. Your credit card and your credit score is a big part of that, and we're here to help. So reach out to us, schedule a consultation, completely complimentary, and we're happy to help.
See you next time.
See you next week.